Hello, and thanks for watching the video. I'm Frank Kopfinger, Head of Investor Relations and Strategy at LEG. In this short video, I'm going to give you a brief update on our full year 2023 figures. With our full year results, we provided the markets with a couple of highlights, which I'm going to address in this short video. First, our cash is king strategy, i.e. the focus on organic cash generation, pays off, and we resume the dividend payment and propose €2.45 per share to the AGM. We continue to see strong operational numbers with a like-for-like rental growth of 4.0%. This underlines the strong performance of the group and reflects also the dynamics which we see currently in the market. Thirdly, we saw another devaluation of our assets in the second half of 2023, with further devaluation of 4.9%, totaling around 11.9% for the full year 2023. This is within our expectations and our guided range. It clearly signals that devaluations are losing momentum and prices have calibrated to the higher interest rate environment. Fourthly, our refinancing remains very robust and still benefits from the low interest rates locked in the past, with an average of still 1.58%, and higher refinancing rates increase only gradually our interest rates going forward. Fifthly, we confirm our 2024 guidance, where we see a further increase in AFFO of around 5%. Let me now walk you through those highlights with some further details. Key highlight is certainly the resumption of a dividend payment. With €2.45 per share, we pay 100% of the AFFO. This is in line with our dividend policy. We do, however, keep the net proceeds from disposals, which are also part of the potential dividend base, within the company to strengthen the capital base. As a reminder, the net proceeds from disposals are the proceeds after paying down the underlying debt. Those were €55 million in 2023, and as I said, we will keep them to strengthen the balance sheet. We considered the proposal to be a balanced approach between the cash return for shareholders and capital preservation at the same time. Then secondly, on the financial performance. Our business model is one of the most robust in European real estate. As a provider of affordable housing in Germany, we benefit from the strongly increasing demand for our product and the outstanding performance of our platform, allowing to manage our asset base most efficiently. The results are reflected in another decline of the vacancy rate to a once again record low of 2.4%. At the same time, rents on a like-for-like basis increased by 4.0%. This includes an 80 basis points contribution from the cost rent adjustment for our subsidized units. At the end, we could generate €181.2 million of AFFO, which is our core KPI, and reflects the cash generation of our platform beside any disposal or financing activity. Based on the strong operational performance, the AFFO came out slightly above the upper end of our guidance range, which was €180 million. Then thirdly, on the valuation. In the second half of 2023, we saw another devaluation of our standing assets of 4.9%. This is in line with the guidance given last November of 4.0 to 6.0%. In the full year 2023, the devaluation amounts in total to 11.9%. From the peak in H1 2022 to year-end now 2023, devaluation effects added up to around 15.5%. Like in the first half of 2023, devaluation was strongest in what we call the high growth markets, or to put it otherwise, in the markets with the lowest yields. Our higher yielding markets, on the other hand, which offer now gross yields of 6.2%, prove to be more value resistant as they offer already attractive spreads versus the risk-free rates or against financing costs. Taking into account the expected rent increases for 2024 of 3.2 to 3.4%, we see our portfolio approaching attractive levels with a gross yield of around 5% against the background of a very resilient business model. Driven by the devaluation, LTV rose to 48.4%. This is above our midterm target of 45%, but there is no immediate effect on our stable Baa2 rating, our cash generation ability, or access to financing. Disposals can certainly help to bring down the LTV. We made some good progress there by selling around 2,000 units, as well as commercial units for a total of 155 million euros in 2023. Roughly 50% of those proceeds, i.e. 80 million euro, have been booked within our 2023 figures. The other half will make its way into our 24 numbers due to a transfer of ownership only this year. All of those have been sold at book value, and we will continue our approach to not pass shareholder value to third parties by selling at discounts or engaging in structured deals. Talking of which, let's touch now our fourth highlight, the financing, and our financing remains rock solid and very robust. We continue to benefit of an attractive financing structure. We have an average interest rate on our debt of still only 1.5% at an average of 6.2 years. This means that higher refinancing costs will continue to only slowly affect overall financing costs. We have all our maturities for 2024 already refinanced, and we are fully refinanced until mid-2025. On the liquidity side, we have around 400 million in cash and cash equivalents, and have undrawn RCFs of 750 million. Obviously, we are not going to use the RCFs for refinancings, but I believe it is reassuring to see that in theory, cash and RCFs combined would cover all of our maturities until 2026. Furthermore, as another financial cushion, there is even a commercial paper program of another 600 million euros. And lastly, let me touch on our guidance 2024. Overall, our 2024 guidance remains unchanged. We confirm all our targets, which we presented already in November 2023. And we aim for a further improvement of the AFFO to 180 to 200 million euros. At midpoint, this suggests another 5% increase over our strong 2023 result. Key driver is certainly the rent growth of 3.2 to 3.4%, as well as a further reduction in investments to still significant 32 euro per square meter, as we continue there on the investment side to deploy the capital more efficiently. And with this, I come to the end of my video. I hope it gave you a good overview of our 2023 full year results. And you certainly find the entire reporting package on our webpage within the IR section. Should you have any further questions, then please do not hesitate and reach out to me or the IR team. Thank you and goodbye.